You are welcome to a new trading week and also a new trading month as well. Our goal, of course, in this forex trading industry is capital preservation, right? Managing risk, preserving our capital while expecting to make profit at the end of the week or probably at the end of the month. Now, if in the process of managing our capital, preserving our capital and managing risk properly, we ended up not making profit that week, it is what it is as far as the account is safe and we are able to manage the account properly. We go again next week. And if at the end of this whole process, managing our account, preserving our account and managing risk effectively, we were able to make profit, right, it is what it is. So now, what is the rule for this week? I set a very simple rule. Right, of course, I trade only SAE USD, right, and this is what I actually enjoy doing. And my rule is very simple. As far as the gold market, right, as far as the price action is below these two lines on my chart, right, I'm not going to go detail into this, but as far as the price action is trading below these two lines on my chart, that means that SAE USD is below these two moving averages on my chart. I am not going to be looking for buy entries. I will only be looking for opportunity to sell gold. And the rule is very simple. As far as gold is below this red moving average, especially in 1 hour time frame or probably in 4 hours time frame, so that is also okay to go to 4 hours time frame and also check, are you seeing both the 4 hours time frame and 1 hour time frame, they are carrying the same information, and the information is that gold is currently bearish. Gold has broken through the red moving average. That is my rule. When I say my rule, it is my rule, and I don't care what another person does. But as far as this market or these candlesticks are below this red moving average, I am not going to be looking for buys in gold. My sentiment for gold still remains bearish until the market breaks above the moving average. I look for sales whenever the market is below these moving averages in my 1 hour time frame and probably in my 4 hours time frame, and I also look for buys when it is above these moving averages. If you check what has happened in this asset SAE USD throughout last week, you see that once price was above these moving averages, right, this green moving average, anywhere you go in the lower time frame, especially 5 minutes time frame or even 15 minutes time frame as the case may be, you'll be able to get opportunity to buy. So we look for buys when price is above and we look for sells when price is below. Now currently the answer to all my questions are very clear on the chart because the market is actually bearish. It is still trading below the exponential moving average 20, right, which is this red line here. Now all I need to do is now to go to a lower time frame. Now if I go to a lower time frame like 5 minutes time frame, I'm going here with high level of clarity because I know the direction. All right, I'm going to lower time frame only to sell. Why? Because my 1 hour time frame had already confirmed to me that the market is bearish temporarily. Because one thing about the trend of the market is that the trend can actually change at any particular point in time. When the trend of the market changes, we also change our sentiment with the trend. But for me, as far as I'm concerned, currently I'm still going to be looking for selling opportunity in SAE USD. Now when I come to my 5 minutes time frame, if you look at the 5 minutes time frame, you see that the information the 5 minutes time frame is carrying is different from what the 1 hour time frame is saying. You could see that the 5 minutes time frame, gold has actually broken above this moving average heading up. But I'm not going to be taking any of these buys because I want the market to align with the trend of the 1 hour, which is what I want price to come back and break below this moving average, and my stop loss is going to be above the moving average, and then my TP will just be 1:2, 1:3, depending on how the market actually moves. And of course, once I get 1:1, I actually break even immediately and then expect more returns from the market, or I'll just accept a trade stop loss.